Traders, this is Christian Farmer at Strawberry Trader Group, and this is your end of day market recap for Wednesday, July 30th. Wow, what a day. We knew that this week was going to be a busy week in terms of earnings reports, in terms of the Fed meeting that we had earlier today. I will try to go over some of the information, a lot of information to go over, and to try to come up with a couple conclusions for that. But before I do, risk disclaimer, please make sure that you read this, and everything that I'm going through is for information purposes only. So taking a look at let me just go through the price action really first. You'll note that by the end of the day, the market breadth was pretty poor. That makes a fifth day where we've, and the way that I measure that is a couple different ways, as I've gone over in previous videos. But I typically, as a very easy look at market breadth, I look at up volume versus down volume in the New York Stock Exchange. When you have something like 35% up volume, that just means that you have a weak tape, right? That there's just more distribution going on. I like to trade more when I know that the wind is at my back in terms of what the institutions are doing. When I know that they're buying in this market, I know that it's just overall easy. It's pretty common sense to know that we want to be there when the institutions are doing buying versus selling, right? When they're doing more selling, you're going across the grain and you're fighting uphill a little bit. It's not to say that you can't find winners when the breadth is poor. There is still 35% up volume, for example, right? But it's just making it more difficult versus when we have something like, 65% up volume. So that's been the situation over the last 5 days. The breadth has not been good. You also, and I'm not going to bring this up now or the video would be too long, but you also, if you look at the McClellan Summation Index, you know that that's been trending down, especially for New York Stock Exchange stocks. NASDAQ is beginning to do that as well. Also, what's particularly troubling is the dollar has been really ramping up. Why is that a problem? Well, I guess it's not a problem for all stocks, but definitely you're seeing that in effect on some stocks, is particularly the small caps. And as the stronger dollar could be a headwind. And if it's a gradual move, it's not that big of a deal. But you're seeing over the course of the last couple of days, you've seen a pretty big move in the dollar. The dollar was up 1% today. If the dollar is up like 0.2 of a percentage point, I don't worry about it that much. But when you've got to move up by a percent, and I think it was up about 0.5% yesterday, these are big moves that the dollar is making in a short amount of time. Again, I'm just kind of giving you a sense of why some things are acting weaker than others. Hence, those small caps not acting very well. What did well today, even after Powell was kind of done speaking today, or was wrapping up his the Q&A, the semiconductors are doing very good. And that stood out to me. That's been I don't know what the semis are up this week, but they've been strong several times this week. We've been seeing a lot of strength in that group. And I think also with some of these reports that you're seeing after the close, talking about that some of the big companies are spending a lot of money, it should bode well for them until something changes there. What was weak today? The home builders were really weak today. I was in a trade, I think, yeah, and I went over in yesterday's video. I dumped that today because I was just worried about on these. It's really difficult to do a lot of trading either the day before, the day of when Powell speaks, because he can completely just reverse everything. And, that's essentially what happened in a lot of stocks today. Obviously, there's a lot of moves that are happening after hours that are reversing some of the reversals of those moves. But I don't think like the home builders are rebounding after hours. And again, a lot of that is they're very rate sensitive. And that's the reason for that. Before I get into some of the charts, and I will do that, I want to just talk about my view. And I did a video earlier, so that's why I'm not going to dwell on this at all, I promise, because I've already done a video on this. But if you're wondering, like, what the big deal is here, why can't the Fed just, maybe just wait for a little bit, right? And make sure I've got the right screen here. And cut interest rates next time. It shouldn't be that big of a deal. The reason for me why it's a big deal is because I know how this usually ends. And I started trading, all the way back in this area. And I remember, I was like an intern back then. I had started my first job here. And we did have a huge amount of speculation in the market. And what happened once I started officially, like was out of college and started after I did my internship and started my career, this type of thing happened. Now again, there was a huge speculative bubble in internet stocks, so they needed to raise interest rates. The issue is whenever you do this, when you decide to do this, when you raise interest rates, and in this case, back in 2000, they raised the interest rate to 6.5%. You are putting the brakes on the economy, really, like you're slamming on the brakes, right? And notice what happened thereafter. They held them for about a year, and then they had to aggressively cut the interest rate back. Why? Because the economy entered a recession. And again, it's the same thing that happened here. There was a speculative bubble in housing. So I completely understand why they raised interest rates, but you can't keep them up there that long because you cause, again, I don't want to say the Fed caused, I want to be careful here. I don't want to say that the Fed caused a recession, but when you increase that much, and if you're not recognizing what you're doing to the economy, you there's going to be a recession that follows. And that's what happened in 2008, 2009. Again, other issues that were at play with the housing market and institutions having too much leverage, but you have to be careful with this stuff. And I don't understand why the Fed isn't thinking about this now, because again, you keep this rate here for a long time. It's inevitable, in my opinion, right? Of what I've seen, at least in the last 30 years, that you're going to cause a recession, right? And you may not see it in the data right now, but it will eventually cause softening data. And it has nothing to do with who's president. It has nothing to do with some of the other conditions. The economy could be like, I get it, like people say, oh, the GDP was okay today. That's the GDP is all the way back there in the past. Right? That's not going to tell you right now what's going on. And if you took macroeconomics in college, you know that GDP is a lagging indicator. All right. So I'm not trying to be gloom and doom here. I'm just telling you, the longer that you keep that rate at 4.5%, the more likely we're gonna hit a recession soon. It's just something that happens. And despite the strength that we're seeing in companies, and it's not a recipe for a healthy economy to keep that. As far as I know, the US economy, other places have higher interest rates. I get that. But and again, you could disagree with me, that's fine. But I'm telling you, if you keep that interest rate at 4.5% for months to go, you're gonna have a recession in the United States. All right, and it's different. Like if we were at 2%, right? If that's where the rate was, I would agree with people, and I would say that's no big deal. They don't need to cut interest rates. But we're not at 2%. We're at 4.5%. And again, look at the other times, then what has happened thereafter. All right, I'll move on from that. I apologize, but to me, like this is important stuff, and I don't think people understand 4.5% is very different than 2%. All right, let's how about that? Let's move on here. Let me share the screen. Now um let's get to so earnings reports. I'm going to go over some more charts here in just a second, but I'm just going to read you off these numbers. So, by the way, Microsoft gives their guidance during the earnings call, so watch out for that. But their numbers are unbelievable, right? They beat a lot of estimates. Their revenue is $76 billion. Estimate was 73.8. Their cloud revenue was 47. Estimate 46. Intelligent cloud 29.8 versus estimates 29. So as I said, when you go up, Microsoft is up 30% from the last time it reported earnings. I said one of the things that I mentioned is that you're going to need a knock your socks off quarter for the stock to go up more. Do I think they delivered that? I do. That's very impressive across the board. Meta is also up nicely. I'm using the 1 hour charts here so that you could see if what the we're moving up. This sold off a little bit into the quarter. I've gone over this from time to time, whether when a company's weak into the quarter or when a company's strong into a quarter, most of the time it doesn't matter at all, right? And look at what Meta did into the quarter. It was weak, right? It's been weak this week. It doesn't matter. Sometimes people do know things, and we look at the option market for that sometimes, but it doesn't. Sometimes a company rallies into the earnings report and then it sells off. So I tend to think that I'm a firm believer of buy the rumor, sell the news. But this is a little bit different with names. Sometimes they do well into earnings, sometimes they don't. I'm just going to go up and down a list of a couple names. Look at Carvana. What's a really crazy thing is when you look at the weekly chart of Carvana, we're now exactly back to where we were in the height of 2021 when we went all the way down here. What a reversal. Stocks don't normally do this type of thing. You got one here in Carvana. Robinhood, a pretty muted reaction after hours. I am long this day. I sold the majority of my position in my trading account, but I still have it in the TTG trend portfolio as I don't really trim there. I have stocks on for a reason. And of course, if there's a disaster of an earnings report, I take the name off. Another semiconductor name. I've mentioned that these are strong. Look at PI is up again. There are so many of these semiconductors that are doing very well. Not all of them. ARM is down. Right. Again, I talked about this yesterday. I said, make sure that you go over the bad reports and the good reports because there's a lot of that. But I see a lot of strength in some of these semiconductors. I talked about Rambus. I talked about SANM, which is not exactly a semiconductor name, but regardless, let's talk a little bit about looking at the SPY chart. Um, so I mentioned in yesterday's video, right? Watch the 636 level. Now we went deep into this when Powell was speaking, but we're back above. So for now, there's no change. So you could have shorted today; it would have worked right into the Powell meeting, and you could have bought the dip as well, and that would have worked. We're basically right where we were to kind of start the week, give or take 0.5%. Now the Qs acted different today, and I thought that this was interesting. The Qs did not break into their value area for the week; they held it even on the dip. By the time the hour closed, because this is an hourly chart, it closed back above, right? And we're at, I believe that's new highs for the Qs. So more strength there, obviously, with some of the earnings as well as some of the semiconductors, which have been really strong. IWM is a different story. IWM went down, and again, this is product of the stronger dollar. Also, interest rates not being the chance that they're not going to cut interest rates. And I believe the probability went down from a 65% yesterday to about a 40% of a cut happening on that September meeting. But this does not look particular. I mean, it's just very. I don't want to say this does not look good for the small caps, but this is kind of what they've been doing. Just you know, back and forth, back and forth, back and forth. I did want to go over the semi chart, which is also at new highs and probably will be up here after hours a little bit. Very strong, very good breadth. I was just going to talk about a couple companies that some folks don't talk about, but look at CRDO, has been just unbelievable, has been so strong. Broadcom just inches up higher and higher and higher. This is a name in the TTG trend portfolio. Again, it's a slower moving. It's hard to trade this one, like actively trade it, but it has been super strong. And of course, NVIDIA is at new highs. AMD, I still think is going to be interesting whether it could get through the top of the value area for the year. But I think it's up after hours. Arista Networks, which is involved in Meta and Microsoft, right? They're also catching a nice lift there in the after hours. What else did I want to go through in terms of these charts that I see? I see F5 is also up again, right? Nice move there. I said I already mentioned Robinhood, but not much of a move. So a couple of the other things that stood out of all the earnings reports, a couple of things that stood out to me, right? The power generation companies. And I really think that there's a correlation between the semiconductors and these power names. But look at Talon. This name doesn't get that much attention. I get it. Like it has to be loved by social media, but Talon has been outperforming here quite nicely. Since they announced, there's two announcements for Talon over the last couple of weeks. One was that they were buying some other utilities, and then number two, they got selected. I think they got a contract from the government, and they've been off to the races. GEV has had like 3 downgrades this week, mostly on valuation. it still shakes off the downgrades and continues to push higher after that earnings report. And then the two other names that I watch in the space, VST is very strong. Had a big day today, up 4.5%. CEG is also doing quite well. Watch Power, they report earnings tomorrow. Notice how it's just been kind of hanging out here. Again, if it goes down, I'll be a dip. I'll be a buyer of the dip. All right, so that's Power, but that's very strong. The only thing in terms of like, I didn't want to really add any new trades today, but what I went over in yesterday's video, Rocket Labs, nice candle today. It held its own, very strong. I looked at ASTS too, but I made the decision I didn't want to buy both these, and I made the right decision for today. ASTS is still hanging out above that value area. That's 52.84 to watch, but I think Rocket Labs is a bit stronger. And then the last one that I saw some really nice strength with today, not phased at all by Powell and company, broke through its value area. So nice to see a cyber name follow through. I had talked about this name, how it was strong yesterday when the market was selling off. And very good. So I'll leave it there. I don't want to make today's video super long. A lot of stuff going on. Thank goodness, is the busiest day of the week in terms of earnings and, of course, the Fed meeting. So I will leave it there for now. Guys, have a great night.